Every time a financial crisis hits, ordinary people lose their savings, homes, and jobs. But have you ever noticed? Someone always seems to profit? What if the system isn't broken at all? What if it is working exactly as designed? Behind every crash, bailout, and economic recovery, there exists a network, quiet, coordinated, and centuries old, that has learned how to turn your losses into their gains. And the deeper you look, the more you realize this isn't just economics. It's architecture, a blueprint for dependency. This is the story of the secret networks that profit every time you go broke. Visuals, old paintings of medieval merchants, gold coins, early European trade routes. Long before Wall Street existed, before central banks were born, power was measured in one thing: who controlled the flow of money. In the 5th, 10th, and 16th centuries, European monarchs were constantly at war and constantly broke. Wars cost gold, but gold ran out fast. So kings turned to private bankers, families like the Fuggers of Germany and the Medici of Italy, to finance their empires. Loans were exchanged for influence, and debt became the invisible chain binding monarchs to moneylenders. But something remarkable happened during these centuries. Private bankers realized a secret truth. They didn't need gold to control money. They only needed credit. Credit, the promise of future payment, could be multiplied far beyond the metal it represented. And that discovery quietly transformed finance from a tool of trade into a weapon of power. Visuals: Bank of England founded, paper money printing, old stock certificates, City of London emerging. By the late 1600s, England was drowning in debt from wars with France. Out of desperation, Parliament approved the creation of the Bank of England in 1694, a private institution with royal backing. Its purpose? To lend money to the government, at interest, using banknotes it created from thin air. That moment changed everything. The government became permanently indebted to private financiers, while paper currency replaced metal as the symbol of wealth. The debt didn't have to be paid off. It could be rolled over, expanded, refinanced. From that point forward, every major nation would follow the same formula. Debt becomes the engine. Credit becomes control. And a new class of invisible power emerged. Not kings, not politicians, but those who owned the debt. They didn't need to rule nations directly. They only needed to make nations borrow. Visuals: Great Depression, early 20th century stock tickers, panic headlines. Fast forward to the 20th century. The financial empires built on credit had grown massive, but unstable. In 1930, the United States quietly replicated England's system by creating the Federal Reserve, a central bank privately owned by member banks but empowered to issue national currency. The promise was stability. The result was dependency. Within 16 years, the roaring 1920s gave way to the Great Depression, a global implosion triggered by overextended credit, speculation, and manipulation of interest rates. Banks failed, families starved, but certain groups came out stronger than ever, buying assets at pennies on the dollar. The same institutions that helped fuel the bubble became the ones rescuing and absorbing their competitors. It was the perfect play: inflate, collapse, consolidate. Each crisis concentrated power further into the hands of those who understood the system's rhythm and could pull its levers at will. Visuals: World War II factories, Bretton Woods meeting, gold bars, dollar bills spreading globally. After 2 world wars, nations were again buried in debt. But out of the ashes, a new monetary order emerged: Bretton Woods, 1944. The US dollar, backed by gold, became the anchor of global trade. But behind the scenes, the same pattern continued: control the debt, control the world. When President Nixon severed the dollar's link to gold in 1971, money became entirely abstract, a symbol of trust backed by nothing tangible. From that moment, every dollar printed was someone else's debt. Governments borrowed. Corporations borrowed, you borrowed. And the networks, international banks, hedge funds, and financial institutions thrived on the interest, the fees, and the volatility that followed. Because when you're the one holding the debt, chaos is profitable. Visuals: 2008 financial crisis, protest crowds, bailout announcements, stock tickers rebounding. Yet instead of dismantling the system, governments poured trillions into it, bailing out the very institutions that caused the disaster. The result: record bonuses for banks, record foreclosures for families. Every solution only fed the same pattern: new regulations written by the same entities that would later bypass them. New currencies printed to pay for old debts, inflating away the savings of ordinary people. And once again, the networks profited. They didn't need to steal your money, they just needed you to stay in debt. Visuals, digital payments, credit cards, central bank balance sheets, global debt charts. Today, the system is more advanced and more invisible than ever. The total global debt now exceeds $320 trillion, more than 3 times the world's GDP. That means humanity, collectively, owes money that doesn't even exist to entities that create it by typing numbers into a screen. Central banks manipulate interest rates, corporate giants issue debt to buy their own stock, and consumers are encouraged to borrow for everything from housing to healthcare. Digital payment networks track every transaction, and soon, central bank digital currencies promise to replace cash entirely, giving monetary authorities real-time control over who can spend, where, and on what. And through it all, the same pattern repeats. When you prosper, they collect interest. When you default, they seize collateral. When markets crash, they buy everything cheap. The game hasn't changed, only the interface. Visuals, graphs showing wealth inequality, insider trading patterns, central bank asset charts. Since 1980, the top 1% of the global population has captured over 2/3 of all new wealth. Meanwhile, the bottom half saw almost nothing. During the pandemic, when millions lost jobs, the world's billionaires increased their wealth by over $5 trillion. These are not coincidences. They're mathematical outcomes of a debt-based monetary system. The more you owe, the more power shifts upward. And the networks that created this structure, international banking cartels, hedge fund consortiums, and policy institutions, have learned how to profit not just from prosperity, but from collapse itself. Visuals, slow fade to thoughtful music, montage of history repeating. So what can we learn from this centuries-long pattern? Takeaway 1. Every major economic crisis transfers wealth upward because the system rewards debt ownership, not debt repayment. Takeaway 2. Governments don't truly control money. They manage the illusion of control for those who actually issue it. Takeaway 3. True financial independence begins with understanding how credit, interest, and scarcity are manufactured, not natural. The warning? As we move toward a fully digital monetary world, these networks will no longer just profit when you go broke. They'll decide what broke even means. Visuals, black screen with white text fading in. Follow the money. The financial world is not random. It's engineered, and every crisis reveals another piece of the architecture. If history has taught us anything, it's this: those who understand the system can survive it. Those who don't become its fuel. So the next time markets crash or your currency loses value, ask yourself, who's collecting while everyone else is losing? Because somewhere in the shadows of global finance, the same networks are waiting, ready to profit once again. If you found this story eye-opening, share it. Not just to spread awareness, but to weaken the illusion, because the first step to freedom is seeing the system for what it really is.